Good evening and welcome back to Be Rich. Today I want to talk about Japan and I want to show you what is happening in Japan and I am going to suggest a trade. Remember, I told you buying ruble was a good trade, and a lot of people immediately asked me how to buy ruble from India. Now I'm going to suggest something else, but don't do it if you are in India. But if you are in outside India and you can afford to wait for 4 5 years, this is a great trade. What I am now suggesting is buying yen. You can buy yen in various ways. You can buy a basket of Japanese stocks. You can buy a basket of people who supply to Japan completely. Or you can buy yen as a currency. The yen has fallen to 137 yen to a dollar and is expected to fall further. This is a 24-year low and can even go back further. So this is 1998 when the yen was last at 137. This is 7 years after the great Japanese bubble burst. So we are looking at a historic time. Things could get worse. It could go to 150. Most people wouldn't, of you who were not even born when yen was at 150. I was born when yen was at 150, but I was not aware and I was not following markets because I learnt about markets when I was about 17 or 18. And at that time, yen was not so bad. Things are going to get really bad because in economics, there is a difference between yields. Japan is today defending a 0% yield. Whatever is the pressure in the rest of the world, the same pressure is being felt in Japan. Energy prices are higher, gasoline prices are higher, everything in Japan has become more costly, and inflation is only at 2.5%. Whereas in the rest of the world, it is way above 8%. What is the difference between what is happening in Japan and what is happening in the rest of the world? Japanese companies are making record profits. They have been making record profits for some time. The main difference between Japan and the rest of the world, developed world, is missed in the rest of the world. The consumers, that is the workers, have got higher pay and have got larger stimulus. In Japan, beaten by years of stagnation and deflationary pressures, companies are reluctant to increase salaries. So, Japanese consumers are getting lesser salary in the places where they work. Even in Japan, employment is tight. People are not available for jobs. In fact, there are a lot of Indians working in Japan, much to my surprise, which I didn't expect. But salaries are not rising. When I spoke to somebody in Japan, he said, as an expat, I'm making more salary than what I'm making in what I would make if I joined the parent company. I rather be an expat. The words were prophetic. They told me Japanese companies are not raising salaries because they don't want to go back to the past. They don't want to go to a time when it was impossible to make profits and deflation was killing them. So while everything is becoming costly, the Japanese central bank is defending the 0% rate for its 10-year yield, which means Japan has negative interest rates. And Japan is being forced to buy government bonds to make sure that the peg is defended, the 0% peg is defended. What has happened now is that they are now buying 20 trillion yen post pandemic. That is, before the pandemic, they were buying 10 trillion yen worth of bonds, and today they are buying 20 trillion tens of bonds. And this has meant that the yen has continued to slump because the yield differential on a 10-year government borrowing is now nearly 3 to 3.25%. It is clear that America is going to increase interest rates further. In fact, the Fed will increase interest rates to nearly double of what is here to the minimum. That is, the Fed rates, which are 1.5 to 1.75, will go to 3 to 3.25 even before the Fed can think of cutting rates. But long before it cuts rates, the Fed has to pause. The pause itself is something 18 months away. Therefore, the Japanese currency is bound to weaken and weaken further, or something else has to happen. What is to happen is that the Reserve Bank of Japan, the Bank of Japan, has to stop buying 20 trillion bonds. The Japanese central bank decides to go back to its original rate of 10 trillion bonds. Yields will surge. The Japanese central banker feels that the Japanese economic recovery is weak. People are not used to inflation and therefore the economy will struggle if interest rates are allowed to increase. Therefore, he is determined not to allow rates to go up. So, how can this end? Normally, when there is divergence between Japan and the world, the value of the yen falls. This is normally in stagflationary conditions. But the moment America enters recession, which all of us are predicting, and if the recession comes sometime next year and it is very deep, then it will hurt people. And when it hurts, people look for the last for a reserve currency. Yen has traditionally been a reserve currency when the world is on deep recession. Therefore, if one is certain, if there is going to be a deep recession in America and Europe, the yen will rebound and rebound with a vengeance. In fact, many of hedge funds already are short Japanese government bonds. They believe that they don't have to wait for the recession. Even before the recession is due, Kuruda, the Japanese Bank of Japan chief, will be forced to reverse his policy and stop buying government bonds, allow yields to surge. But the strange is the worst of the world that the Japanese companies are making record profits. They are very profitable, but at the same time, they are not willing to share the spoils with the workers. The workers, because of 20 years of stagnation, are in no mood to put up a fight and are willing to accept the wages paid. This is the paradox of economics. Buying yen will be a good trade even if it makes short term losses. 3 years down the line, you can expect handsome profits. Thank you for watching. Be rich. If you like this content, kindly consider sharing it with among your friends and relatives. If you have already not subscribed to my channel, press the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will be not notified every time we put out a video. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.